And how is this related to gold and silver? Well, when there is a run on cash, that means the Fed has to print one last time, and they will do it immediately this time. And I believe that the moves that gold and silver will make when that is done to prevent banks like Bank of America from completely failing will be so extreme that they will shock even the most ardent of gold and silver bugs and bulls like myself. There'll be no more emergency dollars to borrow for treasuries, and interest rates are going to skyrocket. And that is when a cash run could happen in the big banks, and Bank of America could be in trouble and be forced to sell its held to maturity securities. Because what is the difference between available for sale and held to maturity? It's just an accounting gimmick. There's no law that says they can't sell these things. They just don't plan to, so they can pretend that they have it at face value, even though it's not face value. But, you know, that was a new regulation, I think, after the 2008 financial crisis or something. They make up new fake rules that aren't in tune with reality, and they wonder why they're not in tune with reality.
Gold prices experienced a drop to nearly a 2-week low on Tuesday due to a stronger dollar and reduced demand for safe haven assets. Investors held out for insights from Federal Reserve officials, particularly Chair Jerome Powell, in hopes of gaining a clearer understanding of the interest rate trajectory. Rafi Farber suggested that the decline in gold prices reflects a reduction in geopolitical risks. He noted, "At the moment, it's really still a story about geopolitical risk, and the margins of risks would seem to have diminished a little bit in gold, and prices are reflecting that." Following lackluster U.S. October non-farm payrolls data, there was a growing belief among investors that the Federal Reserve might have concluded its rate hikes. However, Neil Kashkari, president of the Fed Bank of Minneapolis, stated that the central bank probably has further measures to take in order to manage inflation. Rafi Farber also highlighted the potential for volatility, citing Powell's upcoming speech, as well as the forthcoming Treasury auctions in the next few days. He indicated that any signs of weak demand during the auctions could lead to increased pressure on yields and a downward push on gold prices. Investors are eagerly anticipating Powell's speeches scheduled for Wednesday and Thursday, hoping to determine if he maintains the dovish stance adopted following the recent Fed meeting. Now we'll show you clips of Rafi, but first, like, subscribe, and turn on the notification bell for more videos like this. And if you want to add Bitcoin to your portfolio, check our pinned comment for some very special sign-up bonuses, as Bybit gives you free $20 just for creating an account, so you can start trading real crypto today.
This is the long-term chart of gold purchases and liquidations going back to 1950. So we see here that from 1950 to 1964, I think this is the London gold pool over here collapsing. Right here in 1968, 1969, this is when they sold a bunch of gold to try to keep the gold pool at a constant price. And that was like the eve of the collapse of Bretton Woods with gold at $35 an ounce and the closing of the gold window by Nixon. So there was a whole bunch of gold buying in the 1950s and early 1960s. And then big sales, and then pretty much nothing. There was like net sales, mostly net sales from 1968, the collapse of the gold pool, until 2009. And now, yes, central banks have been buying gold since 2009 every year, and whoop-de-doo, and it's great for gold. And that does have to do with gold's rise. It's not disconnected completely, but no, it's not going to save any currencies, because even as central banks have been buying gold since 2010, it has not helped any currency. The currencies are collapsing in real terms. Hyperinflation is at the door. Why doesn't it matter? Because if the currencies are not directly convertible to a fixed amount of gold, the amount of gold on a balance sheet of a central bank doesn't matter, because people won't trust it if it's not convertible, and it won't be. So central bank gold buying is really irrelevant in the long term, or even in the short term now, if the end game is short term away, and it could be. So it affects the spot price, but it does not save the currencies. I guess that's the best of both worlds. And so what I'm saying here is that the central banks appear to have woken up, but their moves will not save their gold derivatives, which are the currencies. They will all die. And since the central banks have woken up, it's only a matter of time until the public does, and they will buy silver, just like central banks are now buying gold. But for most of them, it will be too late, because the stackers will already have what they need, and it'll be up to us to distribute it, not for other currencies, but for goods and services directly, because it will be the money by which the division of labor is maintained, and whatever remains of society after this is done is salvaged. Everything will be fine, but there will be chaos in the short term.
Since 2010, central banks have ramped up their gold acquisitions in a bid to expand their reserves beyond their heavy reliance on the dollar. However, the transcript underscores a stark reality. These gold purchases will not serve as a lifeline for currencies due to their lack of direct convertibility to gold, inevitably leading to devaluation and hyperinflation. Rafi Farber, the speaker, highlights this crucial point, stressing that the awakening of central banks to the significance of gold won't salvage the underlying gold derivatives representing fiat currencies. As a looming crisis approaches, this could trigger drastic fluctuations in gold and silver prices, surprising even the most dedicated enthusiasts of these precious metals. The recent surge in central bank gold purchases, amounting to 337 tons in a 3-month period and a record 800 tons in the initial 3 quarters of 2023, indicates a significant shift away from dollar reserves. Nonetheless, this trend won't avert the inevitable devaluation of fiat currencies. The speaker foresees a potential red flag in the financial market when reverse repurchase agreements reach zero, signifying the onset of the next financial crisis. This decline in reverse repos could trigger a scarcity of cash, compelling major banks to sell their held-to-maturity securities and potentially prompting substantial money printing by the Federal Reserve. The looming financial crisis could set off extreme market responses in the realms of gold and silver, placing a premium on those who already possess these precious metals, referred to as stackers, while others may face challenges acquiring them, particularly when central banks are heavily investing in gold. Now we'll show you the rest of the interview of Rafi. Like, subscribe, and turn on the notifications bell for more videos on masterminds like him. Let's get into the video.
There will be no time to chase. But for now, why is gold outperforming silver? If we are on the verge of a financial catastrophe, the dollar should be strengthening, and it is. So why is gold outperforming? And this might be the answer. Why gold is outperforming silver? We have this chart from Bloomberg that says buying binge. Central banks continue to buy lots of gold, and this is true. We're going to put this in context in a second. So the appetite of central banks for gold has increased dramatically since 2022. And this central bank gold buying, since they don't buy silver, silver is not worth it for them. It is too hefty of a commodity, and it doesn't have enough concentration of value. Gold is the bank's money and silver is the public's money. The public has not woken up yet, but it might be the central banks have, but it's not going to help them. We'll get into why in a second. The paragraph here from this Bloomberg article to which this chart was attached says countries expanded bullion reserves by 337 tons in the 3 months through September. The World Gold Council said in a report Tuesday that follows an increase of 175 tons in the second quarter, which was bigger than the council's previous estimate of 103 tons. So central banks are buying more gold than the council, whoever that council is. I don't know what the council, who's on the council? Anybody on the council? I don't know who's on the council, but they say things and apparently it's important, whatever. So why doesn't this matter? It matters for the gold price in the short term, but it doesn't really matter in the long term. It's not going to save any currencies, and here's why it won't.
What do you think of today's show? Do you believe that the recent surge in central bank gold purchases is a significant event for gold and silver prices to move in 2024? Post in the comments section down below your gold and silver price prediction for 2024, and I see you next time.